session. Where do we go from here now? Aditya Agarwala joins in for a quick technical check on the market. Aditya, there was belief that around that 17,000 mark, the 200-day moving average comes in as a support. But right now where we are is in the middle of, no man's land. 17,100, we're lower from the resistance zone and a little higher from the support zone.
Good morning, Mangalam, and thanks for the show. Not clearly, to be honest. The support zone was somewhere around 17,070. That happens to be the 61.8% Fibonacci retracement level of the previous up move from about 16,800 to the recent highs of 17,400. So technically, this was a support area around 17,070 to about 17,050. The first support has been held. My sense is market could see a bit of a short covering rally from here, maybe closer to 17,200 is where I'm looking at. Another 100 point from here on, but I don't see too much of a rally, Mangalam, to be honest. A market could remain choppy and volatile, and if just in case 17,070, 17,050 levels break on the downside, chances are high we can slide all the way down to 16,800 or maybe below that. But mind you, this could be the last leg of selling pressure that we are going to see. Traders need to be very cautious. At the moment, 17,070, 50 is the immediate support zone. Maybe you can put a stop loss there closer to about those levels and look for a minor short covering trade in the markets for at least 100, 120 points. But that will be it. I don't see too much of a up move in the markets from these levels. So trade with cautious both on the Nifty and the Bank Nifty.
Okay, all right. So you are expecting some amount of downside for the Nifty, but probably capped at 16,800. But Aditya, in terms of specific stocks, what would your call be? And what would your call be to, on the entire auto space as well, which is really seeing some amount of downside this morning?
So as far as autos are concerned, Ekta, there is a bit of a profit booking, no doubt about that. Mahindra is something which had outperformed big time, and if you clearly take a look at the higher time frame charts, there were signs that there could be some bit of profit booking both in Mahindra and in the names like Tata Motors as well. The two-wheeler stocks have also corrected significantly in trade today, especially Hero MotoCorp. So I don't rule out a further leg of correction in these stocks, especially the ones which did rally significantly. Like names like Mahindra and Tata Motors can correct a bit. But apart from that, I don't see too much of a correction in autos. They could be in line with markets. But apart from that, I don't see too much of a correction in autos. Coming to stock-specific ideas, Voltas is something which is looking weak on charts, is on the verge of a breakdown from a neckline of a head and shoulders pattern. So traders can go ahead and initiate fresh shorts here for targets of 860 on the downside, put a stop loss at 910 on the upside. The second stock recommendation is a buy, actually. It comes in Tata Chemical. If you take a look at the way the stock has bucked the trend, it's broken out from a consolidation pattern heading to new all-time highs. There is enormous strength in the stock, and volumes are also suggesting the same. So traders can go ahead, buy at current levels, look for a target of 1260 to about 1270 on the upside with a stop loss at 1170 on the downside.
Chemical stocks have been doing well, and Tata Chemicals, like you pointed out, has been at the top of that list with a 2% gain as we speak right now. A good outperformance. Just before we slip into the money control segment, just keep an eye out on Axis Bank. That's the one stock from the banking pack in an otherwise underperforming banking pack, which has recovered a fair amount from the lows and currently moved into the green as well. Let's stick with the banking pack itself. We have a special segment where we get you ideas for profit coming in from our colleagues at Money Control.